Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the US 30 on a 2-hour chart. There's not a lot of change in analysis from yesterday. The 13,000 here, we're seeing the reaction through here. So we're looking at a little wave 4 here. In simplistic terms, we should just see a and a B and a C correction through here. Once this is complete, we should see a move to the upside for wave 5 of wave 1, and then we would see a larger A, B and C correction across here, which could pull back 61.8%. That's sort of textbook stuff if that moved up to 13.1 there. So we could see a move back to the 12.8 from that area there. Now also with wave 4s here as well is that they can get complicated, especially if waves 1 and 2 is simple. So that means that in simple terms, the ABC here is in 3 waves, but it could turn into 5 waves, which would be a triangle or a double zigzag. The point being is that in one way or another, this market's not going very far for a while yet, and that means that if it does push up through here, then it's going to be pulled back down through to here. So there's a lot more to go through here. So it's not like it's going to trend away in some strong way. Of course, the catalyst will be the financial solution for the US. Yeah, and that's that really. There is another alternative count with this particular structure here, and if I just move to that now for the Dow, this is the the other wave count is, we had this as wave 4 over here. So just looking at here, we had this as wave 4, so that'd be an A and a B and a C, and then from here would push up through that. So that's a 2-hour chart. If I drop it down to the 20-minute chart here, we've still got this A, B and C here, and that finishes reasonably nicely from there. That would be the low here. Would need to see that push up straight from here in terms of up for 1 and back for 2, up for 3, 4 and 5, making a new high here. That would be the wave 4. The other way that the alternative structure would be, I've got this around the wrong way actually, but not to worry. The other structure is this is the alternative wave 1 here, and we're looking for wave 2, which would bring us back into here further as such. So just going over that wave count through here, this is sort of how it's labelled. If it does interest you, this would be up for 1 here and back for 2 here. If you're looking at the cash market, the Dow Jones cash market, rather than this futures market, then the count will be a little bit different in that case, because this trades 24/7. You won't see, this would be more like wave 1 to this point here. And then wave 2 to here, and that's the count that we do have, and that's sort of taken from the cash market as such. But in this case here, we would be looking at this as wave 1, wave 2 here, and then wave 3 moving up in terms of the 1, the 2, the 3, the 4, complicated 4 there. You see how simple wave 2 is, and wave 4 is complicated, and then wave 5 making a new high here as such, and then for wave 3 here, wave 4, then we go up for wave 1, wave 2, wave 3, wave 4, wave 5, creating the top here for wave 1 here, and this A, B and C here would eventually just be the A wave, with a B wave to come in and a C wave further down into this area here. So that's a possibility. So when it comes to trading, it's really important to use the levels. So if you're sub trading here, then you would be looking for 29, 10, 20 and 30. So the top of subgroup 1 here, looking for support there, and then adding on 129.50 there and building up the trade from that point there. So the Elliott gives us direction, but the price here, trading levels give us the trade set up from that point there. So using them together is a stronger case there. The European markets, the FTSE here, as mentioned, look, it's just doing what it's supposed to be doing across the 5-8 through here, the A, the B and the C here. In fact, this could actually be the A, the B and the C into here, as this looks like a little 5-wave structure up through there. Once again, Not that it matters if support is found on 5.810 here, nice solid support here. Sure, glean a small position, add on the 20 and take profit at the 30. Wait for 30, wait for a correction to go across the 30, and if it finds support, then move to the upside. We do expect this to move to the upside in due course, just that the correction could get a bit bigger, and that's why you use the levels there. I was looking at the European market and the DAX are pretty much the same. So when I was looking at the DAX here, this is the Euro, the German Bund for the DAX for the Germany, and I was looking at its wave structure coming to the downside here. It still needs to play out in a possible little A, B, and C here, but either way, it will be moving lower through here. So as that moves lower, then we're going to see the DAX lift off the 7,300, and the FTSE would be heading in that direction as well. The Australian market, for just a couple of things here first. This is the ASX cash. So yesterday we had nice strong volume here on a move to the upside. So it really helps us, solidify this in terms of five-way in ABC correction as such, coming down through here like that, and that ABC correction here would be what we call a zigzag, which would be a 5 and 3 structure coming back up into here. If we can get that to stick there, and then 5 down to here. All right. So what we need now is we need to see this move here coming, this little move coming up through here, which would be, we're looking at that being in 5 waves there. We need it to take out the bottom of this first 5 waves down here. So that's what we're looking for here, and it's just about the case there. But I just really want to take out that low on this one here, which would be the 44.72. This low in through here. Once that's been taken out, this 40. Just bring this in a bit here. Sorry about all this. The 44.72 here, I just want to see that taken out, because this can be the A, the B, and the C in here, and then the C wave down here. So taking that low out there, or just the 44.72 on the cash, will just help, it will help make this an A, B, and a C correction, and then we know that top is going to be taken out through there. So yeah, so that's good. On this market here, we can see that the 44.50 is becoming the support there, so you can pretty much trade long from that support there, keeping the stop under there. The base metals are positive and pushing to the upside, but when we're looking at China, we're seeing weakness there. So I just want to bring up I'll just use the Shanghai comp, because it's rather than the Shenzhen, because of just people look at this one more so for whatever reasons. But look, what we're looking for here is where we know that we've got a major level sitting there. So we know that even though it's pushed through and it's gone down on stronger volume and so forth, we're basically looking for a 5-wave structure from this high here. Okay, so that would be, it's pretty much that there. I was thinking that on Saturday we got some PMI figures coming out of China. They should be above 50, so that should be a positive. So we should see this low here come into play here. But at the end of the day, in terms of everything, we need to, once this moves through down here, it's the retest that we're interested in looking at. So if this becomes, the resistance through here. So I was sort of hoping for, if the Australian market is going to be pushing up, I was hoping for this to come down through here, to give us a low down here, and then come back up and give us support on that 2000 there, trading level 2. And that would give us an upside, because it's tested lower and then found support. That's like perfect. That's what we're looking for. So if it finds this here and finds resistance here and then works lower, well, then we need to look at a growing picture to the downside. But let's just see how this plays out first. And when you're trading the levels, even if you're day trading on a 2-minute chart, you don't trade the breakout through here. You wait for the breakout to come down, then retest here, and then if the retest fails, then you go short. Okay, that's why a lot of traders lose money when they take the breakouts, because they'll get stopped out a bit later on. So yeah, anyway, enough rambling. All right, let's have a look at commodities as they are positive and would be the driver for materials countries like ours and Canada. I just want to start with the US dollar, because commodities are traded in US dollars and will be affected. So, look, we're looking for this to come down to the 80 and have a bounce. And, well, we've got our bounce. And the thing is that this little bounce here, if you look closely, is in 5 waves. So, would have wave 1 and 2 into here. This would be wave 3 here. This would be wave 4. And this would be wave 5 here. Wave 5 may not be finished, in terms of that may be wave 1, wave 2, wave 3, wave 4, and wave 5 here. But the main point is that this move down here, this would be classed as a wave 4 here. So we're expecting further downside here. But before we get further downside, this bounce here can produce more of a corrective pattern. So we could be looking at this, an A wave up to here, a B wave here, and then a C wave in 5 waves to the upside here, before we see a move back down for further lows here. Now, this means that if we do get this A, B, and C here, which is highly likely, then of course, this is going to affect all other markets, and they will be going through corrections as well. And that's kind of what Wednesday and Thursday does in the bullish weekly cycle. So in the bullish weekly cycle, we see that Wednesday can make the intraday high for the week, and Thursday can be the bear day, and then off we go for Friday being positive again. So Wednesday's a day that can open a little bit high but trade lower in the first session, and then make new highs in the afternoon session. And then Thursday can open high and then trade lower again. It's not always the case, but it happens more often than not, and it's always just good to have that, have that that awareness there, because if it does play out, at least you know what's occurring, and it gives you a better connection to the market. So understanding this here would just helps you with in looking at the commodities, and also the currencies, and also the stocks as well. So looking at let's just have a look at BHP before I go here. Okay, so there's BHP for the night. That's so yeah, a bit softer there. So you can kind of expect that today in our section. The copper market here is in terms of the levels here. While it's above the 350 here, it's positive. But if we take this low just under here, the 348, which would be the next degree smaller, because we got 310, 320, 330, 350. And then 380, but between that we've got the numbers start again. The numbers are just 1, 2, 3, 5, and 8. So here we've got above this would have 50, 1, 2, and 3, and then we would have 5 where it is here, and then we have 8, and that's the same down here as well with the 48. So in terms of this particular structure though, and this is an alternative count here by the way, so and I'll explain that in a minute. But look, long as this market stays above the 350, everything is rosy, and we'll see continue moves to the upside. We know that the resistance will be 5 and 8, and the 56 is a bit of a GAN number really. So and that kicks in a lot as well. It's always worth mentioning. But look, resistance areas through there for the people that like Elliott. What I was looking for here, if you can follow this, is a wave 3 to here, wave 4 to here, and I was really looking at this low section through here as wave 5 here, but an A to here, because it does appear to be 5 waves here, and then a B wave in 3 waves to here, and that would leave us, that would be an A and a B and a C wave up to here, and the C wave would be up for 1, an A and a B and a C here. We get 5 waves in there, and then we'll look for wave 3 to the upside, wave 4 to here, or wave 4 to here, and then we'll be looking for 5 waves up. So if the 5 waves are starting from here, then that's the top in place then, and that's why I've mentioned the 350 and the 348 in this case, because if it does come down through here, then we know that this particular count that we're looking at here is correct, and then we'll be looking further to the downside. As we see further to the upside at the moment, this would be up for 1 and back for 2, and this would be a 3rd wave here and a 4th wave, and we'll see a 5th wave move up through there. So just looking at this in a couple of different ways. Base metals seem positive, and when we're looking at gold, we're looking at still looking at wave 4 here, the ABC correction through here. Let's just see if it holds into this particular trend line through here. So if it moves back up above the 1745, then you can look to go long based on the 1745. That's why it's important for a market to come down and then get back above that there. So we'd be looking for waves 1 and waves 2 to the upside from here, something like this. Anyway, up for 1, back for 2, and then moving up that way. But while the US dollar index is moving up, we just looked at before, then obviously there's going to put pressure to the downside on these markets here. So let's just see how this pans out through here first. And silver would be the same as well in terms of having its corrective pattern across the 3300 here. It's not ready yet, but if support is found, if this moves say down to here, or if that's the low here, whichever the case may be, if this moves down through here and then finds support on the 34, then you can get a small position there and look to add on this situation here. If this doesn't make new lows down here, then you really need to wait for it to sit on top of the 34.10 at that stage there and develop support there, and then go long from that stage there. So it's all about support and resistance. Alrighty, let's have a look at Forex. Okay, just starting with the US dollar index again. We are looking for this wave 4 correction to play out, just as mentioned. We can get one more new high in here. That may not be the case, but it can be. So just allow the next session to kick in, or this one to finish. And we just got to work through this situation here. Once we've got that A, B, and C here, then we can look for further downside. And this would be reflected in the euro here. With the euro here, we can see that from the reaction here that we were looking for yesterday at the 130 there, we've got a wave 3 here, and we're looking for a wave 4 here as well. And as the as the US dollar is pushing to the upside, we've got the euro pushing to the downside, and you can quite clearly see here that we've got a nice, this is 15-minute chart, so it's a bit easy, but you can see the nice wave 3, wave 4, and wave 5 structure playing out through here. That would just be wave A here, and this wave A here may not be completed as well. There may be another little move down here before we get that A wave in, so just be careful about that. But once that's complete, we should see a wave B come in, which will be in 3 waves, pulling back 50, 60 odd %. Use the levels, of course. And once that's completed, then we'll see a 5-wave structure to the downside, pretty much the same as this wave A here will be the same as wave C over here. Normally in a zigzag correction, which is a 5-3-5 structure, then normally you would find the C wave coming down, the 5 waves for the C wave coming down on more of an angle, like coming down more on an angle like this, where the wave A is normally sharp. So if we see the C wave coming down, which is sharper than the A wave, then you know there's problems in paradise. Then so then you know that there could be an error somewhere. So we're looking at the personality of the structure at that stage then. But as it stands, if this is the A wave here, then we'll see an A and a B and a C wave back up through here, and then we'll get the 5 waves down. So we can be looking at a 5-wave structure down into below the 129 here, into this area through here, depending on how high the B wave goes. If the B wave goes really high, then we'll have a lower C wave here. But if it's a low B wave, then it's sort of weakness in the market, and we'll see a lower C wave come in. So it just depends on it. So it's always even a wave 4 pulls back 38.2% of the wave 3 that we got up here. It's always better to count the follow the structure as it unfolds to get more accurate reading on the situation. The Australian market as well is also going through much the same thing as well, in a wave 3 up here. We're looking for wave 4 to come back, with the wave 4 here as well. Look, that may be the low there. It looks like it's got further to play out. So we've got waves. This has happened just since I've been started the video report, but I was looking at this here being an A wave either to here or to here. Not that it makes any difference, because a B wave would still end up here as such. So the A wave would be to here, an A and a B, and it looked like there was 5 waves in here for the C, for the B. But if the C wave here is always in 5 waves, so I was looking at an A, 1, 2, 3, 4, and then possibly the 5 to here if this new low was made here. So in this structure coming down through here, you can see that we've got like a wave 1 coming down, wave 2, so this will be a 3rd wave, there'll be a 4th and a 5th. So we should see a bounce off the around this number through here as the wave 4. So we should see it sort of push up after that. Now the good news is that if it does come down through here somewhere about and then find support back on the midpoint, then you've got a price point to work from. So wait for that to become tested support. Sure, you could probably pick it up. You know, it's a bit sort of odd here, but the 144 here, I see that as part of the 72 series, and this is 144 is where Gann and Elliott meet. It's probably the only number they agree on. Not that there's much difference between Gann numbers and Elliott numbers, or Fibonacci numbers rather, but 144 is part of the Fibonacci sequence, 55, 89, 144. So it's a good likely support, and also wave 4 always normally pulls back to the wave 4 of 1 lesser degree, which was this wave 4 through here. In fact, that little wave 4 there should actually be on this little one here, because we've got 5 waves in here. So we've got 1, 2, we've got 1, 2, 3, 4, 5 for the 3rd, the 4th, and the 5th. That's right there. So yeah, that is coming down now, so that's cool. Alrighty, well that's really about it. So in the bullish weekly cycle, we can see Wednesday morning down, and then Wednesday afternoon up, and Thursday opening high and trading lower. So Wednesdays and Thursdays are normally normally collect all our long stops, and there's not much that we can do about it. We could give them more space, but I always feel it's better with short-term trading to keep a tight rein on the situation. A small profit is better than a small loss, so to speak. So yeah, and then if Thursday is down, if it does come down on lower volume, then we know that we're going to be in for a bull cycle next week. So trading lower on Thursday on lower volume will give us a buying edge to come in on Thursday afternoon if you're there, and adding to the situation on Friday morning, and a strong close on Friday will give us that follow through on the Monday. So we'll be looking to add to positions on Friday afternoon for the close as such as well. Alrighty, I think that's it. So yeah, well, good morning and good luck.